What is up, everybody? Welcome back to another episode of Bitcoin and Markets. My name is Ansel Lindner, and today is Monday. That is the day that I put out the most comprehensive free weekly newsletter in Bitcoin called the Bitcoin Fundamentals Report. Sign up for that on bitcoinandmarkets.com. Then I go live here and we discuss. We go through the newsletter and we discuss it. So let's do that right now and jump right into it. bitcoinandmarkets.com is where you find this. Subscribe to the email list. You can also subscribe to support me over there. Also, guys, I am live streaming on YouTube, Rumble, Twitter, and Telegram. Telegram is the community home. If you're watching on Twitter, I would appreciate if you jumped over to YouTube and like, comment, subscribe. I'm trying to grow that so I can monetize these live streams and have a lot more interaction with the audience. Guys, put your chat down below and I will answer any questions you have throughout this. Just speaking of the devil, BTCP, happy green candle Monday. Love it. Love it. Yes, we will go over the price here in just a second. But all right, let's jump into it. Fundamentals report number 309. I did forget to update the block. Oops. But quick navigation, you guys can jump through. This is a very comprehensive newsletter, so you can jump through the different parts. Okay. If you'd like to support the show, here's a link to do that right here. Appreciate everyone that does support. This is completely no ads. I don't read anything. I've never taken money from an ICO to pump their coin. This is a Bitcoin only type channel, and I can't do this analysis, this unique, contrarian, I think very valuable analysis without you guys. So appreciate everyone that supports. And if you'd like to support me, click here. All right. Snapshot of Bitcoin. Breakout is imminent, people. What an exciting day. Yes, big green candle Monday. We will go over the price down below in the price section. Media sentiment is very positive. Kamala's coming out talking. Larry Fink is coming out talking. That came out, that headline of Larry Fink talking about the Bitcoin will be bigger than the U.S. housing market. That came out after I already sent this, so that is not included this week. But still, it was very positive even before that. Network traffic is moderate. We'll take a look at the mempool and the fees and the difficulty and hash rate in the mining section. The mining industry is low revenue right now, but hopefully this price pump will help out. Weekly price at the time of writing was 65,972. We'll take a look at a live chart. That's about 4.3% up issue to issue. Now, the last 2 weeks, it was like $50 difference, then $150 difference, and now we get a green almost $3,000 difference. So that shows you how flat it's been, how much pressure has built up in this market for the spot price, and now we're starting to rocket higher. Market cap 1.3 trillion. Satoshis per dollar 1518. One finny, that's 1/10,000th of a Bitcoin, my denomination, is $6.59. Mining sector is previous difficulty adjustment was plus 4%, almost back to all-time high difficulty, but not quite. The next estimated adjustment is in 8 days, and that will be negative 2% right now. We will see how this price affects the hash rate. Mempool back over 100 megabytes, 112. There was some action, so we're going to take a look at that mempool chart here down below. Fees for the next block, $1.48 at the time of writing. Of course, this is very volatile, 16 sats per virtual byte. I wouldn't be surprised if that's a little bit lower right now as markets are closing. Low priority fee was $1.02, so you could save about 50 cents if you want to wait an hour. Lightning Network, stand by. My son brought a delivery from the neighbor. All right. Before we went live, I was talking with Telegram, and yeah, today is Columbus Day, and so all my kids are home, and they come on in my office whenever they so choose. But okay, let's continue with this, make it a little bit bigger. We were on the Lightning Network, so capacity fell slightly. Okay, 4 Bitcoins, which isn't much. It's like doesn't even register on the percentile, but it is under 5,200 now. and it is a decline. Channels 49,197 also declined by 82 channels. Nothing major, but this is kind of what we have been seeing for 2 years on the Lightning Network. Just a slow grind down. And I mean, I'm surprised that it hasn't had a big cliff. That might be what it needs, is like a big shakeout, people closing their channels and then new people coming in. I don't know. But I hope the Lightning Network gets some success on this bull market. So we will be watching that very closely. Okay, headlines. Hurricane Milton was last week. That kind of affected some of my content. I was not affected actually, like my house or anything like that, but we were pretty shut down, and there was some panic out there in Florida, what was going on with Hurricane Milton. So that did affect my content, but now I'm back up to 100% this week, and it should not affect live streams or blog posts or anything like that. Okay. Mount Gox disbursement timeline extended 1 year. For months, we've been talking about this major repayment by Mount Gox. These repayments are being made in Bitcoin, leading many to the conclusion that there will be a significant selling to cash out. I previously reported that this concern was overblown, and so far we have not seen any notable selling. It appears that they have been having trouble getting all of their coins distributed because the recipients have not completed the required procedures to receive payments. So this is probably a bunch of small guys, um, had $100 or less on Mount Gox. Maybe they don't want to dox themselves. Um, they don't want to sell their claims. They don't want to do anything with it. They just are signing it off to, as a loss. Now, I mean, I've known people, I didn't have anything on Mount Gox, but I know people that had very small amounts, $5, $10, and they're not going to go through any sort of trouble to do that. But these guys have asked for an extension, and with permission of the court, they want to change the deadline a whole year out to October 31st, 2025. So most of the distributions have happened, but there are going to be some tail distributions, probably extending up to 1 year. But of course, again, we haven't seen anything notable on the price of Bitcoin. All right, next headline. MicroStrategy stock surges 250% over its Bitcoin value. This latest surge in MSTR is bringing all the skeptics out of the woodwork, seemingly without knowledge of any of the underlying. So they don't know anything about Bitcoin. They are calling the 250% premium to NAV a sign of a bubble. However, they should know Bitcoin can close that distance by going up quickly. So here we go. Here's the chart of MSTR. You can see it did kind of lead coming down here, the price of Bitcoin back in 2022. Bitcoin bottomed before MSTR, because Bitcoin bottomed on this one. Then MSTR bottomed and then came up. And it has been really mirroring the price. However, you can see the price is lagging right now. These are both exponential. These are both on exponential. And so Bitcoin can catch up. I have this tweet from Econom Pick Jake, and he's saying, this is a big head scratcher. Oh man, I just opened up the tweet. Okay, this is a big head scratcher at 250% premium to NAV. And I responded to this and I said, hey, well, there is a profitable business behind it. They are raising money at 0.625% interest. And, so this profitable business is continuing to acquire Bitcoin. And every time it seems like they go out there and acquire more Bitcoin or have offer more shares out there for people, whatever the case is, that the amount of Bitcoin per share actually ends up higher than it was previously. So, they're doing a good job, and I don't see that it's not a head scratcher to people that understand Bitcoin. What else did I write about this? This is a big blind spot for TradFi, who might expect Bitcoin to act like gold, or Bitcoin companies to act like gold companies. It would be unthinkable to expect a 250% rally in gold in just a couple of months, but with Bitcoin, it's possible. MSTR might be overvalued right now, but you can't use a simple premium to NAV assessment to gauge that. MSTR can access capital at 0.625% and are buying Bitcoin by the billions of dollars worth. They have a successful software company behind it, which profits roughly $1 billion a year. They are currently up double on their Bitcoin investment so far. So, despite this, I wouldn't recommend buying MSTR here. Bitcoin is likely the better play in the short term as it catches up, but there will be a time when the premium is much more attractive. All right, next story. Kamala Harris is pushing equity in Bitcoin. So, this was a quote today. This came out. She's going to be talking about, I don't know if she's already made the statement or whatever, but she dropped some stuff here today about what she plans to do for regulating Bitcoin, the Bitcoin industry. So she ensures Bitcoin investors, quote, that they benefit from a regulatory framework so that Black men and others in the market are protected. So this is DEI cranked up to 1,000. First, we had FEMA that said they were going to use equity in their disaster relief, essentially saying they're not going to help white people. And now we have this. This is like appealing to her base. The base is very, very small and insignificant, really, I think, the hardcore DEI base. It's not like what we are shown, okay? I think the hardcore woke base is just a fraction of this country, maybe 10, maybe 20%, but that is the base. The rest of that is, just moderates, people that have voted Democrat their whole life, people that don't even follow politics, all that much. But that would be the rest of their contingent. But this is specifically trying to implement some Marxist DEI stuff. So, anyway, I take this as a sign of weakness, not strength. They are hemorrhaging the Black vote. So, they're trying to appeal to Black voters because they're hemorrhaging the Black vote. Okay, next story. Craig Wright sues Bitcoin Core for 911 billion with a B dollars. Absolutely insane. Almost $1 trillion. I think it was 900 pounds, if I'm not mistaken, but let's see, what does this say? 911 billion and 50 million pounds. Yes, so that's actually, I did not convert that. So let me convert that to dollars. And we will say, yes, that is $1.1 trillion. Holy crap, guys. $1.1 trillion. It's worse than I thought. Anyway, I don't have much to say about this. We all know that Craig Wright is a fraud and will sue anything that moves. Looking forward to countersuits to stop this man. We must stop this man. All right. That's it for Bitcoin headlines. Let me check the chat before I go on to the macro headlines. Put your comments down below. If you're on Twitter, jump over to YouTube, put your comments there. Let me check and see if there's any other comments. E asks if I'm concerned about open interest on Bitcoin still being high. No. I would be concerned if longs were extremely high right now, but if I recall over the last week, that has not been the case. So we have room to load up on the longs. But if you have more evidence, pop it in the chat. I'll take a look at it. I'll even try to pull it up here. Okay. Let's go. Oh, BTCP. Is it possible that MSTR premium is linked to institutions who want more Bitcoin exposure, but are limited to certain portfolio allocation restrictions? 100%. That's my read on it. We talked about it a little bit more down in the price section. But yes, that is what I'm thinking. They're just trying to get exposure to Bitcoin. And, it's a tech stock. So, for example, in Q2, we learned that the Swiss National Bank had bought MSTR. They also actively buy other stocks, like they have a bunch of Apple stock. But I don't know if they have like commodity ETFs, if that's like part of their allocation. But they do have allocation for tech stocks. So that would fit perfectly into something like that. And I do think that's where a lot of the demand is coming from. All right, let's go into macro. So, China stimulus story is not over. Of course, we talked about this a lot last week and probably the week before. Um, I am. I don't think this is lasting. Okay, China is doing this because they have to, not because they want to. And so the underlying story here is huge weakness out of China. That's the underlying story that we have to understand here. And what happens after major stimulus? Like, just think about the great financial crisis, major stimulus, depression or recession. Okay, so the recession, the big impacts and the long-standing impacts come after stimulus starts because stimulus is happening because things are getting bad, right? Really bad. That's what I expect here out of China. They're doing the stimulus because things are getting really bad. And over the next several years, we will see this play out as the economy completely fizzles out. All right, let's read some more. The Chinese stimulus a couple weeks ago, spiking China's stock market and global markets in general, started to fade rapidly last week. We saw Hong Kong real estate companies diving. We saw some stuff from the Shanghai 50, their stock market there. Lost, I think it was like it had gone up, I don't know, 25-30%, and then it lost another 10%. So it already started fading rapidly last week. Where most macro pundits get this wrong is focusing on an outcome instead of a reason. So they focus on what's the outcome of stimulus? Oh, money printing. Money printing makes inflation and it's going to boost the economy. Uh, but no, what you need to concentrate on is what is the reason for the stimulus? Why was massive stimulus needed? Because their economy is in serious trouble. This initial spike wore off as specifics about the government plan were lacking. So they said, "Hey, we're going to do all this stimulus." I think at one point it was a trillion yuan, which is like about 150 billion dollars. Then it has risen throughout the last week as they tried to drill down and really come up with a concrete plan for this stimulus. And it's up now to roughly 6 trillion yuan, which is almost $1 trillion. But note, Craig Wright is suing for more than the Chinese stimulus. Craig Wright is suing Bitcoin Core for more than the entire Chinese stimulus. Um, but they're going to inject this, specifically the 6 trillion yuan, into the largest banks, trying to save them from collapse. Jeff Schneider has been covering this over the last, I would say, week pretty well. And so I don't have any more specifics to add to that right now. Um, Other than, this is a really bad sign for the banking system over there. Um, it all starts from, yeah, this real estate collapse that we talked about. We were the first Fed Watch, which I was on at the time with CK on the Bitcoin Magazine channel. We were the first Bitcoin podcast to talk about the Chinese real estate market collapsing and Evergrande and all of that. So that's kind of what you get here on Bitcoin and markets is, a real heads down macro show that is real heavily Bitcoin oriented. So, anyways, what else do I have to add about this? The largest banks trying to save them from collapse. Um, yeah, it's not looking good. Also, this morning, a CCP guest on Bloomberg said that the planned stimulus will be enough to cover a local government deficit of 10% of GDP. I couldn't believe it when he said that. So he made this statement, and initially he says 1% of GDP. Then he corrects himself and he says, "No, no, no. I'm sorry. I mean 10% of GDP." I was like, "What in they're that behind? Their deficit is so far behind that they have to make up 10% of GDP just to stay solvent?" This is bad. Very, very bad. And what's 10% of GDP? What's the Chinese GDP? 15%. So that's, or sorry, $15 trillion. So that's 1.5 trillion. So yeah, that's where the 6 trillion starts becoming making more sense. I mean, it's going to have to be double this though. 10% of GDP is 1.5 trillion, and they're trying to paper it over with 800 billion. So this is going to have to go up more and more. So anyway, this is massive, since we know that government stimulus simply masks the problems. It doesn't fix anything. So they're going to do all the stimulus, and it's not going to have creative destruction. It's not going to flush out the bad debt. It's going to reinforce the bad debt. It's going to reinforce the bad capital allocation that's in China, overproduction, export oriented. When they're trying to stimulate domestic demand, they're wasting these trillions of dollars here to maintain the old way. Why is the old way failing? You will know if you're a fan of this show, because globalization is going away. We're entering a new era, a multipolar era, and globalization doesn't work anymore. This export-led economy doesn't work anymore. And that's what they're spending trillions of dollars to reinforce, when they really want to boost their domestic consumption. Anyway, they're doubling down and entrenching their broken model here. Very, very bearish for the future of the Chinese economy. And you guys can watch this video if you'd like. I think I shared it as well on Telegram. All right, next story. September CPI only looks like it's rising. Okay, that I need to put the emphasis on the other word here. So CPI, September CPI, only looks like it's rising. Headline came in at 0.179% versus 0.1% expected. But you can see this number rounds up, right? And that's what they did. The headline just rounds up instead of using the more decimal places. 0.187% in August and 0.155 in July. So these are all very, very similar numbers here. They're all circulating around this 2% annualized number. But if you look at these, okay, the last 2 months, 0.155, 0.187, 0.179, that does not look like reacceleration. If you dive into it, right? It does not look like reacceleration, because it's not, but everyone's saying that it is. Year to year, what is down was down to 2.4% versus 2.4% expected, and down from 2.6% in August. Core came in at 0.31% versus 0.2% expected, but this could be 0.25 expected, or actually it'd be 0.249. This is not accurate enough to see exactly how bad this is. And it was 0.28% in August. So very small, 0.03 of a percent change in the rate of core CPI increase month to month. That's really nothing. But of course, that's not how the headlines say. Okay, year over year, 3.26% versus 3.2% expected. So see this rounded up. 3.3 was the headlines that you saw out there. But really, this is 3.26. And 3.27 was in August. So still a 0.01% down from August year over year. Anyway, you won't hear that. So here's the headline CPI real quick. You can see it's been pretty much flat the last 3 numbers. And there is like some cyclicality to this. So, it's not like we, ups and downs. Okay. If we are up here for 3 months in a row, most likely one of the next prints is going to be much lower, because this sawtooth pattern that is going to be maintained. So what will the inflation needs to say when next month, or when I guess it would be October, comes in at 0 or even negative again? Their inflationista narrative is going to blow up. Okay, anyway, you won't see those second or third decimals in the mainstream media. Instead, you'll see the headline 0.2% versus 0.1% expected. Inflation, be scared. They also won't mention that there was a slight decline in the month over month. The month over month prints are right about the 0.167% needed to annualize to 2%. People don't quite get this, but the year over year number is just the sum of all of the monthly prints. So if you get a monthly print at 0.167% for 12 months in a row, it comes out to actually just because it's rounded, right? It's rounded up, just slightly above 2%. And that's their goal. So this is not telling the Fed they made a mistake at all. This is flat, right around that 2% goal. Anyways, there is a very slight increase in core, but generally flat. Nothing to signal reacceleration of CPI. And so here is core. It has month over month, it did jump up, but again, we have this general trend lower, and we have this kind of bouncing up and down. If we're bouncing up, we're bounce back down. Okay. You won't see this either. Shelter is finally starting to cool. Shelter was 0.2% month over month, down from 0.5% last month. All items less shelter was 0.12%. So all items less shelter is under that important number. And shelter is a lagging indicator. So shelter starting to come down, starting to get in line finally with everything else. Excuse me. And this is a picture of less shelter. Did bounce up here, but will start coming down. All right. Next headline, and then I'll take a look at your guys' comments. Dollar rises. After many weeks of the dollar threatening to break down, it has started to rally once again. Curiously, right along with Bitcoin. So, and I added that last part in right along with Bitcoin because most people think that Bitcoin and the dollar are inversely correlated because Bitcoin is an inflation hedge. But since Bitcoin is also a deflation hedge, Bitcoin will rally or can rally while the dollar is rallying. All right. So here, let's take a look at this. I was talking about this down here and I'm like, oh man, I'm so surprised it got this low. I'll have to reevaluate everything if it drops, down to 99 and whatever. And of course, this was a big bullish divergence, and it shot higher. It probably even went higher than this since I snapped this morning, getting towards oversold. So I don't think this has much more juice in it right now. It'll have to take a break for a week or so, but eventually it's going to get back up to the top of the range. And that's what I say here. Overbought, slowdown consolidation likely soon. I expect that it returns to the top of the range through the rest of the year. So, out to the end of this chart here, it should work its way up, back up to 106 or so. That's what I'm thinking. All right, so that's it. Next up is price analysis, but let's take a look at the comments. If there's any more, put them down below. Let me check Telegram. A Craig Wright meme. Yeah, that's funny. Oh man, he's just like a nasty person. He just looks like a nasty fraudster, liar, scammer. Like he's like the face of all scams out there in Bitcoin and the Bitcoin industry, the larger Bitcoin industry. All right. No other comments. All right, let's jump into price analysis. What people are waiting for. So price this morning hit 66,264. Let's check the live chart. So the live chart has not broken that high yet. Still 66 to 64 high for the day. You can see this red line has been the trend. If we go out to the weekly, you can see where that engages on all the closes, the weekly closes. So here, 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 and maybe here. Maybe we break out this week. But also notice how close this election is. November 5th. It's coming up 2.5 weeks, 21 days from now. So 3 weeks. But all right. That is a live chart of Bitcoin. Let's go back to the report. So last week, I said that the level to break is the top of the pattern at 66,500. So see, we did not quite make that. 66,500. Once that happens, there's nothing stopping the price from slipping all the way to 70,000. Shorts, which are sweating at 70,000, will try to defend the 66.5 level again, but they will eventually get squeezed. So I've shown you the heat map. You've probably seen the heat map other places. I did not include it this week. But there's a ton of shorts right there at 70,000. Then there's also a ton of shorts all the way up to 74,000. I mean, it's something like $40 billion in shorts that will be liquidated at the all-time high or by the time we get to the all-time high. So that's a massive amount of liquidity. And so that's what I was saying. I was looking at this important level, 66,500, and we did not break it yet. But I did predict that we would break it last week, which we did not. And so we'll rolls over to this week. We'll probably be breaking it this week. I was a little early on that one, but now the price is finally there and attempting to break out. Today's strong move is likely driven by high inflows into the ETFs, creating massive pressure and just overall exposure. And that's what MicroStrategy shows us. But here is the chart that I included. You can see this channel that we've been watching for many, many months now, 6 months or more, and the 200-day moving average in orange and the 50-day moving average in blue, breaking out above those back to the top of this channel. And if we continue going, I mean, wham, we really, it's going to feel like it just moves. Like each tick is going to move higher. And so it just slips higher. But anyway, that's the daily chart that I included today. We can take a look at the weekly chart with the 50-week moving average. And it's starting to pinch. 50-week moving average. Starting to pinch the price to break out. The election is kind of giving us a timeline here on that pinch. Where is it going to end? Probably right before the election is my guess. But yeah, that becomes crystal clear. Next one we have is the monthly chart. We can see that despite the painful sideways consolidation, we are only slightly behind schedule according to the halving. So one thing I have been doing a lot is studying the cycles from the halving. So when you have a halving, that's the start of the new cycle, and you go for that whole epoch or whatever you want to call it, that 4-year slice starting from the halving. However, if we look at the election cycle, or we can look at the time since the previous low, which there is another chart down below we'll take a look at, we're right on schedule. So I highlighted the last election's October and this election's October. And you can see October was pretty significant back to the highs, the previous highs here. So I wouldn't be surprised with October at least getting back to all-time high right now. And then it really took off after that. And the setup is very similar after the halving and the U.S. election. Okay, moving on. I found this chart and I thought it was interesting. It does kind of derive from the power law, which I'm not a huge proponent of. I guess you would call me kind of a fan. I kind of like some of this math-driven stuff. I really like stock to flow. I mean, I really like the idea of it and the concept of how stock to flow affects price. Um, but anyway, I thought this was an interesting chart. And what he does is he takes, let's see, he aligns it to the bottoms of the cycles, and then he has some standard deviations around the cycles. And his standard deviation range 1 year from now is all the way from 165,000 all the way up to 950,000, almost a million. And I would emphasize the lower part of that range. So here we go. You can see kind of the shading here, right on schedule. I mean, it's amazing how right on schedule we are. But if you go out to 1 year from now and you go up and you look at this range, actually, this inner range is one standard deviation. That goes from 165 up to 950. The middle here, middle of the road, is about 350. But I would take a look at the bottom half of this range in this standard deviation for a cycle. All right. More about MSTR, and this is where I was getting more into it, BTCP. So if MSTR is any indicator, we could see some fireworks into Bitcoin price. Last quarter's 13 Fs showed MSTR as an alternative for large pools of capital to get exposure to Bitcoin instead of the ETFs. Notably, we saw central banks, like I mentioned, the Swiss National Bank, sovereign wealth funds, and national insurance firms buying MSTR. If the recent spike is due to demand from these groups, it is only a matter of time until it is translated into the spot price. Even if we have to wait for MSTR to issue more debt or more shares or whatever to buy more Bitcoin, even if we have to wait for that, which I don't think we will, the price will still go up. So anyway, I was expecting Bitcoin gains sooner in the month. We are passing the 14th here today, so we're getting into the second half of the month already, and we haven't had significant breakout. So I am kind of surprised by that. And I also expected there to be a brief cool off immediately leading into the election. So maybe, the first few days of November there to have a cool off, but we will have to see. This hasn't quite moved yet. And if it starts moving now, will we have a cool off period before the election? Maybe not. I had expected Bitcoin gains earlier in the month, followed by a brief cool down. Oh, man. Geez Louise. That is a copied paragraph. Okay. Overall, the weight of fundamentals and price pressure is upward. The pressure for breakout is building. MSTR's pump is likely not a bubble, but a sign of growing demand. October is historically a positive month for Bitcoin, a very positive month for Bitcoin, and there is a significant amount of liquidity pulling the price toward an all-time high. I wouldn't be surprised to see a strong breakout this week into that range. So there you go. That is the price section. Now, before we get onto the mining sector, let me check comments again. 173 people watching, guys, probably over on Twitter. Jump over to the YouTube and Rumble. Links are in my pinned tweet, and you can make a comment there. Trying to grow the YouTube channel up to get it monetized, so I appreciate you guys heading over there. Also, check out the community on Telegram, t.me/Bitcoin and markets. Going back and forth all day, not just Bitcoin stuff, but we talk demographics, we talk macro, we talk everything in there. So check out the Telegram. All right, back into the headlines and mining sector. Morgan Stanley urges CIOs to explore Bitcoin mining stocks amid rising energy prospects. So this came out from cryptoslate.com, I think just today. But this is a pretty big story if Morgan Stanley is urging these people to pay attention to Bitcoin mining stocks. And let's just read a little bit from this article. Wall Street giant Morgan Stanley's global head of research recommended chief investment officers should consider adding Bitcoin mining stocks to their portfolios as new opportunities emerge in energy infrastructure. All right. The recommendation, included in a recent briefing sent to CIOs of major asset management firms, highlighted how new mandates for data centers to incorporate additional power generation could drive demand for energy intensive industries like Bitcoin mining. So if you're going to be adding this extra additional power generation, you, you're going to want Bitcoin miners to take up that spare capacity. Okay. That's what they're saying. The report suggested that these mandates could spread across multiple regions, expanding the scope for new investments in natural gas fired plants and nuclear power. So, nuclear power plants have been a topic of discussion. I think they're starting up at least one or two that they have closed down over the years, but that is coming up. Lots more power generation and all that excess power, between normal and peak demand, that's going to be sucked up by Bitcoin miners. Next headline: Bitmain rolls out new high efficiency Bitcoin mining machines, topping 319 terahash per second. Now, I'm not a big miner. I know there's guys in the Telegram that are miners, but this seemed very awesome. This is a jaw dropping 860 terahash per second in one of their new liquid to chip miner. This is the next gen U3S21, blah, blah, blah. So this is pretty good. Lots of developments in Bitcoin mining. For a long time, it was how small could we make them? I think it's got as small as 5 nanometers now, which is about the limitation because of the way electrons move through computer chips. But now they're going to be figuring out ways to use liquid cooling to manage miners that can squeeze out more and more terahashes out of each chip. So very interesting. A lot of innovation and development going on in Bitcoin mining and chip design as well. All right, hash rate and difficulty. Hash rate has fallen since the difficulty adjustment last week. Hash rate has fallen since the difficulty adjustment last week of plus 4.1%. So here we can see this pink line plus 4.1%, but hash rate has actually started coming down, even though the 7-day hash rate, 7-day moving average, or whatever this moving average is still going up. The daily hash rate was coming down. Difficulty is very near an all-time high. However, the estimated next adjustment is negative 2%. This can change rapidly with a big move higher in price, especially if we're getting all these new miners, right? If all these new miners start coming out, people start, renewing their fleet of miners, then this can move very rapidly. So, bottom line for mining is that it's very healthy, considering an 8-month consolidation in price that has dragged on painfully, much longer than expected. So these miners have stayed alive. They've made it to the end of this consolidation. I think the end of this consolidation. And so now, they're very healthy, ready to go into the next leg of the bull market. So that's the overall takeaway, I think, from the mining industry. All right, next topic here is mempool. Mempool finally showed some signs of life this week. So let's take a look here. You can see right here. So each of these different colors is a different band of fees. How many sats per byte are you paying on your transactions? And you can see we got several different colors here. That means there was a period where a lot of people were sending transactions and they were relatively price insensitive, right? So they got bid up very quickly up here, but nothing like we've seen in the past. This was just some life that we haven't seen for a very long time. This is a 3-month chart, and we haven't seen anything like this for more than 3 months. But this spike actually occurred last Friday on the 11th, and the price didn't reverse on that day, or did reverse, but it was not a significant breakout. The mempool in this case was a leading indicator of near-term volatility, and in this case, upwards volatility. So if we go back to the live price chart and we go down to the daily, what we're looking at is this day right here, Friday. It was a pretty nice, positive day, but it wasn't anything out of the normal. It was still in this general area that we've been in for a long period of time. So it wasn't anything special on the chart, but it was on the mempool. So the mempool was a leading indicator of this candle that we saw today. which I think is very interesting. Okay, back to the report. Almost done here, guys. And then I'll take a look at comments after this layer 2 section. So there wasn't anything real big for Bitcoin layer 2s that I saw. So this story is not a Bitcoin layer 2 story, but I think it's a pretty big story for Ethereum. And I'm an Ethereum skeptic, if you will. So I think this being a significant blow to Ethereum is newsworthy. Uniswap is already a layer 2 exchange protocol for tokens. So Uniswap is already like a layer 2. And now it's launching a secondary layer 2. And from this article from Cointelegraph, the Unichain is part of Optimism's superchain. I mean, these are all, oh my gosh, so many buzzwords, dude. It's like a I I would say like a high schooler. What you give a high schooler the opportunity to name some things, and this is like what they would name it: Optimism's superchain. Anyway, maybe that's the internet naming because internet is pretty funny like that as well. An interoperable network of layer 2 scaling solutions built using Optimism's technology stack. Words like this draw people into these scams. Okay. Yes, it's a technology stack. We kind of all understand what a technology stack is, but uh, it's just like there's no meat on these bones. It's just a bunch of buzzwords. Everything's been tried before, people. They're just now they're layering, they're creating a network of scammy token swaps. A network of scammy token swaps is what they're doing. All right. You guys can read the article if you'd like more. So the reason why it's bad for Ethereum, in my opinion, is that it's just like extrapolating away from the base layer. So there will be fewer fees paid to Ethereum if you're using a network of layer 2s and not plugging back in to the main chain all the time. So Ethereum is kind of becoming redundant or forgotten about. It's not as important if they have consensus on these higher layers. The base layer is effectively competing against the higher layers now. I think this is a consequence of a couple of things. One, Ethereum has too much technical debt and it is inflexible. So as you build these systems and you're trying to do complicated smart contracts and complicated things, you're going to build up this technical debt because to fix it might break something else in consensus, right? So you can't like go back and fix everything. You just have to go forward and patch it, like fix it with a patch instead of fundamentally streamlining the code, right? So there's a lot of technical debt built up in Ethereum, and it's very inflexible at this point. So all these layer 2s can do the job, but they are extrapolated away from the base layer. So the base layer becomes much less important. Holding ETH becomes much less important. Okay. And also, Ethereum has cut off much of its inflationary stimulus. And I wanted to go into this more in writing, but I'll just do it here. So, one thing that made Ethereum super successful was that they printed tokens out of thin air. And I don't really want to say money out of thin air. They printed tokens out of thin air that had some monetary value, right? And so that was able to be rolled over into other scams. It was able to be rolled over into other launches that also printed tokens. Okay. And successively down the road. And they could snowball into each other. And that's why you saw this huge $1 trillion scam sector be built off of the snowballing of printed tokens. Well, what Ethereum did was they cut off that spigot because they introduced one of their improvement proposals and to start burning part of the fees that effectively brought its inflation rate, quote unquote inflation rate, um, very low and negative for a period of time. I think it's back positive now. Um, but it was negative. And they did this to compete against Bitcoin's 21 million, right? Why? There's an opportunity cost to holding Ethereum, and that's holding Bitcoin. Um, and Bitcoin's sales pitch is it's limited. It's sound money. So then Ethereum's like, well, we're ultrasound money because we're deflationary. But remember, deflation is not good. Price declines are good, but that's not shrinking of the money supply. Shrinking of the money supply is not a good thing. And so uh, that's what Ethereum instituted. That's why way back when they called it minimum viable issuance. That's what they were shooting for. But they had it reversed. They should have been targeting maximum viable issuance. And that would have kept their Ponzi's going. But now what do you do when you cut off the spigot? These Ponzi's that were built off of snowballing of token printing, there's no base left. Like you took the base away. And that's what's happening now. All of this stuff is being extrapolated out to other layers, and it's kind of leaving Ethereum behind a little bit here. So I expect Ethereum to rally with Bitcoin, many of these tokens to rally, but it's, it used to be what, even 60% of the market cap, or maybe it got up to 70% of the entire Bitcoin kind of sector or industry, if you would count those scams as part of the industry, was 30% was Bitcoin market cap, 70% was the snowball of token printing. Now, this cycle, I think Bitcoin's back to around 50%, and that should probably increase. So even though these tokens are going to pump, there's probably the Bitcoin dominance is going to increase throughout this cycle. But anyway, that's all I got. Down here is in case you missed it from last week. Like I said, it was kind of a truncated week for me. I didn't get out a Forbes post. I'm going to have to do that this week. Did get a premium post out about macro stuff, commodities, yields, and how it affects Bitcoin. A couple macro minutes. Those are good reads. Also, I'm putting out those macro minutes and stuff as videos, standalone videos on YouTube. So you guys can check that out if you're over there. Appreciate that. And now let me check the comments before we sign out for the day. John Delaney, what's up? Any comments, John? Put them in the chat here. 192 people watching. Welcome. Ansel Lindner, Bitcoin and Markets. Do this most comprehensive Bitcoin newsletter every Monday. And then we go over it here on a live stream. Then I also live stream on usually Wednesdays and Fridays. So I try to hit 3 live streams a week and put out a ton of other content on the website. So check out bitcoinandmarkets.com. Also, if you're watching on Twitter, which is where most of the live concurrent views happen, I would appreciate you jumping over to the YouTube, subscribing over there, like, comment, subscribe. Help me grow the channel. I appreciate that. All right, let me check Telegram and see if there's any more comments over here. And I don't see any. All right. So that's going to be it for today, guys. I appreciate you hanging out with me. Like, comment, subscribe, like, comment, subscribe. And I'll see you all on the next one. Peace.